The Reserve Bank's kept the repo rate on hold. The decision to maintain the rate at a 15-year high of 8.25% was in line with expectations and comes as inflation remains at the upper end of the bank's inflation target. Governor Lesetja Kganyago meanwhile says inflation is expected to stabilize at the MPC's midpoint range a bit earlier than previously expected.
We now see inflation stabilizing at our 4.5% objective in the second quarter of next year. This is an improvement on our March forecast, which only reached this milestone at the end of 2025. The changes to the outlook, however, are not large when compared to our March forecast. Average headline inflation for 2025 is only 0.1 of a percentage point lower. Clearly, the task of achieving our inflation objective is not yet done.
Now that risks associated with inflation have shifted to a balanced position, many analysts are predicting rate cuts from the SARB before the year is out. Here are some estimates from Standard Bank's Thabani Ndwandwe, Old Mutual's Johan Els, and Investec's Annabelle Bishop.
I agree with the Reserve Bank that the first quarter will likely be weak. In fact, my forecast for first quarter growth is negative. But there's been a seasonal impact with the Easter weekend shifting from last year being fully in April to starting in March this year. So therefore, we saw a lot of very weak data in March, but similar to car sales that rebounded quite strongly because of that seasonal Easter impact. Other data will also rebound in April. So I also expect a better second quarter. And ongoing easing in load shedding, significant more private sector supply, easing in inflation into the second half, and as we've been talking about, perhaps some lower interest rates, perhaps even a stronger rand, so perhaps some improvement in confidence. My growth forecast for this year is 1.4%, so it's on the higher end of consensus. It's not a particularly strong forecast for what we need in South Africa, but at least it's significantly up from last year's 0.6%. Next year we can drift towards 2%, and this is all on the basis of more electricity supply available, less logistical constraints, and of course an improving confidence level. And as we head into next year, continued low inflation and ongoing job growth. That has been a touch of a positive surprise since the start of 2022 and the end of March this year, 2.2 million new jobs created. That has been supporting consumers somewhat. So we're not in a deep consumer spending recession. It's not great out there, but at least the national account numbers from the Reserve Bank suggest that debt and debt servicing isn't significantly worse than what it was before COVID. So we're roughly okay, and we should continue to improve marginally into next year.
So it definitely does seem like things are getting better than we initially expected to, like the pace that things are moving at are faster than we initially expected. I've got about a minute left, and I just want to go around the panel to get your rate cut expectations and by how much. Thabani, let's start with you.
Yeah, it's always like a crystal ball, but we do think that this year we should get 50 basis points starting from September and then November, and then another 50 basis points in 25 bips increment into 2025.
Annabelle?
We've got also 25 basis point moves. We think this could happen in November, definitely, but obviously there's a possibility of it coming earlier in September.
What about you, Johan?
They might delay till September. I think they should cut from July onwards. I've got 75 basis points in cuts this year and another 50 next year. But a crucial unknown here is when Treasury announces the lower inflation target and over what period should the Reserve Bank then implement it. Let's assume inflation target remains unchanged throughout the end of next year. Then I think 75 basis points cuts this year and another 50 next year.
Well, in company news now, shares in Anglo American fell as much as 5% in early trade and are now sitting 1.38% lower. That's as the market reacted to news that BHP was walking away from a proposed merger with a miner. This leaves Anglo to push ahead with its own turnaround strategy now. BHP is barred from taking another run at the firm for the next 6 months. Zeda has had a difficult first half. The car rental leasing and sales group has felt the effects of a tough used car market, such as high interest rates and fuel costs, and this has weighed on profitability, with headline earnings per share falling 12.5%. But despite this, the firm has declared an interim dividend of 50 cents. This marks the first time that Zeda is returning cash to shareholders since its listing on the JSE. African Bank is back in the black. The group has reported a net profit after tax for the half year of 203 million rand. That's from a loss of 43 million rand a year ago. The firm has benefited from a 38% jump in customer numbers. That, along with more product offerings, has allowed for a more diversified business with multiple revenue streams. Woolworths has warned of a lower annual earnings. That's as the retailer's previous results included the David Jones business and the profit from the disposal of that division. Also, trading conditions in the second half of the year proved tougher than expected for the group's apparel unit. As a result, earnings are expected to be more than 20% lower. Woolworths says a further trading update will be released with specific guidance on key metrics, and the company will open its books on the 4th of September. Old Mutual has delivered double-digit sales growth for the first quarter. The financial services group says the global economy has proven resilient despite concerns around the escalation of conflict in Ukraine and the Middle East. It's added that in the markets where it's operating in Africa, inflation still elevated, albeit with a downward trend. These conditions, according to Old Mutual, continue to negatively impact customers' disposable income in the retail segments. But the firm believes its diversified business is well positioned for growth. Italtal has shuffled its leadership. The Bathroomwear group has appointed Brandon Wood as the new group chief operating officer. He was the group's chief financial officer. To plug that gap, the firm has appointed Lamar Boyson to the CFO position. Boyson was the company's group finance executive. Italtal says the appointments are aligned with the group's long-standing succession plan and ongoing strategy to enhance depth of management in the business.